Welcome back. This is IPO KYC and stainless steel wire manufacturing company Bansal Wire Industries 745 crore IPO opens today. They've set the price band at 243 to 256 crore rupees. It's an entirely fresh issue, no offer for sale. And we're now joined by Arun Gupta, Chairman, Whole-Time Director, and Mr. Pranav Bansal, the Managing Director and the CEO of the company. Gentlemen, thank you very much for joining in. Mr. Arun, if I may start the discussion with you, you're looking to raise about 745 crore rupees. Fresh issue, most of it will go in repaying your debt. What is the current debt? And after you utilize some of the money to pay the outstanding borrowings, what will the debt number stand at, and how will this bring down your interest cost?
We are coming with a 745 CR IPO, out of which around 560 will be repaid against the old debt, which will satisfy almost maximum debt what we have. And balance money we will use, because we are a growing company, we will use for a working capital from there on.
Okay. So Pranav, will you be debt-free after this?
Not 100% debt-free, but almost debt will be repaid.
Okay. Pranav, just a quick word on the company's financials. We were looking at your company and the listed peer, Rajratan Wires, the comparison with your peer, Rajratan Wires. While you're much larger in size, your revenue is about 2,400 crore plus, and Rajratan has revenues shy of 1,000 crore rupees. Your margins are much lower at 6%, while they have, low teens kind of margins. One, can you explain that? And two, what is the outlook on improving margins from here on, or is this a 6% kind of margin level for the company?
Let me give you first a brief on the kind of products that we make to make you better understand, what we do and where we are. So today we are already the second largest steel wire company in India there is. In stainless steel, we are the largest stainless steel producers in the country. The journey started for us in 1938. So today I am the third generation of my family in this business. My father is the one who started manufacturing, hence Bansal Wire, the company, was started in 1985. And since then, we've been growing. We keep on adding new products, new verticals. So today we are in three main verticals. High carbon wires is one, stainless steel wire is second, and third is the low carbon wire. High carbon wire is a product that is used majorly in automotive, general engineering, infrastructure applications. Low carbon is a product that is used majorly for cables, fencing, and these kind of products. Stainless steel as a product, I would say, is used in all your consumer durables. So wherever wire is exposed to the environment, stainless steel plays the critical role. So you will see in all your modular kitchens these days, for example, everything is made out of stainless steel. Kitchen baskets, fittings, everything is stainless steel. So as far as product goes, we supply for the simplest product like a stainless steel scrubber, and a wire even is supplied to Boeing. So we are there across the whole spectrum. Now, when we talk about margins, we today have more than 3,000 products, and therefore, our margins for all 3,000 products are quite different. So now how we look at our margin is more from the return ratios. So we look at we try to focus on ROEs and ROC more than EBITDA margin, because the kind of diversity that we have, every product will have a different kind of a margin.
No, absolutely. Pranav, allow me to come in over here. Pranav, hi. Great to have you and Mr. Gupta. This is Surabhi here. Allow me to come in over there. And, since we're trying to understand the model, we'll come to ROCE and ROE separately. But just to understand, to go back to Rima's question, can you tell us between low carbon, high carbon and stainless steel wires, between these three broad categories, which is the most margin accretive for you? And again, just to understand why a peer would be operating at 14% margin, you're operating at 6%, just to understand whether there is any plan to maybe, as you're looking at your product mix, to maybe gear it more towards the higher margin products. Just a little more color on the EBITDA margin front, because we'll require that from a quarterly analysis point of view.
as I said, we are in three main verticals. High carbon for us is a product that gives us about 13, 14, 15% kind of an EBITDA. Low carbon is a product that gives us about 5-7% EBITDA. Similarly, stainless steel is a product that gives us 5% EBITDA. From here on as well, we are adding a fourth vertical from the Dadri facility, which is a facility that we've just started. It is, of course, India's largest, but also one of the largest wire facilities there is in Asia today. And in that, we are adding a fourth vertical, which we call specialty wire, which is more towards higher margins and higher growth areas, for example, automotive, and especially in the tire industry. And in that product, the main focus area for us is steel cord, in which we will be the first Indian company to manufacture it in India. And,
so that's really interesting. So Pranav, yeah, Pranav, so just to expand on that point, that's really interesting. So now you'll have a fourth big sort of segment coming up, and it's a large facility. You're saying probably one of the largest in Asia, and this is specialty wires. So let's say 2 years or maybe 3 years down the line, what's your aspiration to move from 6% margin? Do you think by the time your product mix evolves, I mean, are you looking to get into double digits? Just give us a directional sort of aspiration for the company.
So, ma'am, even for the last 10 years, if you look at our performance, we as a company, we've grown at about 18-20% every year, be it for 10, 5 or 4, whatever years you want to see. Similarly, in EBITDA, we've been increasing our EBITDA by about 21%, whereas our PAT has increased by about 30% every year for the last 10 years. And well, honestly, we are very happy with where we are, with the kind of margin profile that we have today, because we believe our return on our investments are quite okay. Going forward as well, because the kind of products that we make, we consider it to be a backbone of any industry in India today. Therefore, we are still relying, and we will heavily bank on these product mix that we have been making for the last 85 years. But with that being said, definitely specialty wire is a vertical that we are focusing on. And well, we are going all hands on specialty wire, especially steel, because this is a product that has tremendous potential for us. Today, the market size of India is 2.5 lakh tons. And 60-70% of the demand is being met by imports. So we have only started with a 20,000 ton pilot project in Dadri. And well, we will continue to grow from there.
20,000 ton project for specialty steel wires. What's the revenue potential, and when will it accrue to you?
So the specialty wire project, the production will start within this financial year. If you look at the market prices today, it's about 140, 150 rupees a kg. So, I mean, looking at the current prices, it would give us about 300 crores if we make the full capacity.
So at 100% capacity, specialty wires revenue potential is 300 crore rupees, and it'll start sometime this year. What about exports? You also have about 11% of your revenues from exports. How are the margins there? Is that a growing market for you? And how much will it contribute, say 2 years, 3 years down the line?
So, ma'am, export has actually been a good business for us. In fact, this is a segment that we've recently started. We've only started focusing on export since 2016, 18, something like that. And today, we've touched almost 11, even 14% of our sales in export. And the interesting thing, or the main accomplishment for us in export has been that 75% of our export comes from only Europe and US. So we believe being in such an industry which supplies, we today supply wires for almost all kinds of industry, whether it is auto, power and transmission, consumer durables, agriculture. So there is a demand of our product everywhere in the world. As long as any country in the world is growing, for us, our demand is growing. And from our performance for the last 5-7 years in export, we see something good happening in the future as well. But with that being said, our focus has always been domestic, has always been India. And with India now poised to grow at a higher rate than it has been in the last 5 years.
Sure. Just a quick last word. We've got 30 seconds, not even 30, 20 seconds left. Pranav, very quickly. So after repaying the debt, how much money will be put to work on the CapEx? Where is your current capacity utilization level, and by how much will capacity expand, say by the end of this year and by the end of next year, FY26?
Very interesting question. In fact, we are today almost at full capacity. For the last 2 years, we've been at peak capacity utilization with 2.5 lakh tons of total capacity being there. But now, and only this year, we've started production in the 5th facility of ours, which, as I said, is India's largest and one of the largest fire facilities there is in Asia. And that facility standalone has a capacity of 3.5 lakh tons. So basically, what I'm trying to tell you is that from 2.5, we are jumping to 6 lakh tons of capacity, which is already up and running now.
Mr. Gupta, Mr. Bansal, thank you very much for joining in and wish you all the very best. Look forward to more such conversations. Get into a break. On the other side, we'll put the spotlight on individual stocks which are in the news.